I believe Bitcoin is the way that people can learn and get out of that kind of rut that they're stuck in terms of their thinking. But it comes down to just human nature and what you can accept as a norm or as if it's okay. So
Mm.
if you print money, people are generally okay with it because they don't see it, right?
Mm.
You can mask it and say it's 2% inflation. You can control the metrics by which you measure inflation or all those things. Like CPI is very subjective, right? It's directly manipulatable and controllable based on the definitions that any body uses to define inflation.
Mhm.
But people generally don't want to see things get more expensive that they care about. But if you can boil the water slowly enough, then they don't see it.
Mhm.
So I think Bitcoin brings you back to a lot of thinking and reasoning about free markets because Bitcoin is free market money. There's no way that someone can manipulate it for any significant duration of time. Like,
Mhm.
yes, you can buy a bunch of it and dump it and spike the price up or down, but long term, you can't really keep that up because there's the energy input to create Bitcoin and to use Bitcoin. But let's say, for example, um, you don't want to pay more for stuff. You don't want to see your savings be eroded. But
Mm.
if the government said one day, the cost of water is going to double, you'd probably be up in arms, right? But if
Mhm.
they can turn on the money printer and inflate the money supply, you're still going to pay more for it because everything you're earning is lower.
Mhm.
But what you see is the number on the sheet is not the
Mhm.
same, is going to be the same. And they can kind of use this human dissonance in their thinking
Mhm.
to game the whole system, right? But people, I think, are starting to wake up and understand that money printing is money printing, and
Mhm.
there are a lot of fundamental truths that people will be rediscovering in the coming years and decades. Like another one is energy is important, right? We had the we have the ESG movement and the environmental movement saying we should shut down nuclear plants and stop all these other things. But at the end of the day, you're dependent on energy. Human civilization is dependent on energy, but somehow we've lost that thinking, just like we've lost the understanding of what money is. So I
Mm.
think if you can fix the money supply, educate people about what money is, all the other pieces will come back and fall into place. Well, people definitely are not spending much time thinking about it, right?
Yeah.
And I think this is why initiatives to educate people, either through things like your show or going out and engaging with politicians and governments, is important because we have to
Mhm.
get them back on track. I don't think it's that people can't understand money. I
Mhm.
think fully people really do know what money is. They just don't have the right understanding of it, right? Like there's a experiment that was done where you had two monkeys in two cages and they both performed the same task. One was rewarded with a grape and the other, I think, with a cucumber. And eventually the one that got paid in cucumbers, he was getting angry because he could see the other guy getting grapes and that's more valuable, right? He understands I want that more than a cucumber.
Mhm.
But if a monkey can understand that, then I'm pretty sure people can understand what money is, but they just have been fooled or distracted by, watching TV or the mainstream media and weather balloons and things like that, and they just
Yeah.
don't pay attention to the bigger problem or the important things in life.
Bitcoin's rise above $100,000 in December 2024 isn't merely a rally, it's a seismic shift in the financial landscape. This milestone reflects the convergence of transformative events: Donald Trump's pro-crypto administration preparing to take charge, Senator Lummis's proposal for a U.S. Bitcoin strategic reserve, and a tidal wave of inflows into Bitcoin ETFs. With MicroStrategy relentlessly adding to its holdings, the stage is set for a defining moment in Bitcoin's evolution. Trump's election victory has reignited market optimism, raising expectations for regulatory clarity and a crypto-friendly policy framework ahead of his January 20th, 2025 inauguration. Analysts suggest these developments could elevate Bitcoin from a speculative asset to a foundational pillar of global finance. Institutional investors are pouring billions into Bitcoin ETFs, spearheaded by BlackRock and Fidelity, with the potential to unlock trillions of dollars in new capital and bring Bitcoin into the portfolios of everyday investors. On the corporate front, MicroStrategy's unprecedented commitment to Bitcoin continues to make waves. As of January 6, 2025, the company owns 447,470 BTC, acquired at an average price of $58,290 per Bitcoin, representing a $23.41 billion investment. This bold strategy has cemented MicroStrategy as a beacon for corporate adoption, inspiring companies to reconsider their treasury management in a world increasingly distrustful of fiat currencies. Yet, not everyone is convinced. Skeptics warn that the euphoria surrounding Bitcoin could lead to unsustainable speculation. Questions also linger about whether the Trump administration can deliver on its crypto-friendly promises amid a politically polarized climate. Nevertheless, Bitcoin's ascent signifies more than market exuberance. It embodies a paradigm shift. Institutional, political, and corporate forces are converging to redefine Bitcoin as a hedge against economic uncertainty and a cornerstone of a decentralized financial future. The real question now isn't just whether Bitcoin can sustain these heights, but whether it's poised to surpass gold as the ultimate store of value. Let's get more insights from Samson Mow, the founder and CEO of Jan3, a digital infrastructure company focused on expanding access to Bitcoin technology. What are your thoughts on Bitcoin's trajectory? Share them in the comments, and don't forget to like this video, subscribe to our channel, and turn on notifications to stay ahead of the curve. Thank you, and enjoy the video.
I would say prosperity is, to dumb it down, prosperity is making sure things get better and better over time. In Chinese culture, there is this thinking that each generation should be better off than the previous generation. So it's sort of woven into the culture. You know, things have to improve and get better, and you're striving for that end goal. And again, like going back to the original discussion we're having, if the money supply is corrupted or broken, it's difficult to build on any foundation, right? You can't build a house on quicksand. You have to build it on a strong, solid foundation. And that's probably the most important thing. So without a stable and reliable money, it's difficult to get prosperity. Now, a number of countries, I guess, in the world have reached a certain level of prosperity, but then I believe they're declining now. Like a lot of Western nations, they're starting to decline. You're seeing double-digit inflation in Western countries like the UK that have historically been problems faced by the global South, like Venezuela, Argentina, or Turkey, you name it, right? But now it's starting to affect Western nations, especially dominant Western nations. Like the UK used to rule a lot of the world, right, through its power, but now they're facing the same problems as everyone else, and it comes back down to the broken money, right? And the inability to understand what money is and how you get prosperity. So when money is broken, then everything else breaks. And people are trying to use money as a tool to control people, or some lever they can pull in this cog for the economy. But that just makes it worse. And I like to use the example of Switzerland and the UK. So in Switzerland, I think the Swiss people understand what money is as a whole, as a society, right? They love money. They want you to bring money to Switzerland. Money is simply money. Like they're happy if you bring a suitcase of money or bring gold bars into Switzerland and store it in Switzerland, because that's how you generate prosperity. You have capital incoming, you have investments incoming. And I think we're seeing the global South, especially Latin America, start to understand that. Like in El Salvador, where you just were, they really want people to come to El Salvador and invest in El Salvador and bring their money to El Salvador. But a lot of Western nations want to monitor transactions and limit the amount of money you bring in, or even limit investments. So for example, in Canada, we've passed this law earlier this year, which limits foreign investment in property. So they're using this restriction on property to try to enact some sort of centralized control in the economy, right? They want property prices to come down, or they want more people living in the city instead of people buying property. But anytime you mess with the economics, or you mess with policy in this regard, there are a lot of consequences to that.
Mm-hmm.
And the biggest consequence is a decrease in prosperity because you want to attract capital, you want to attract money. And the barrier to a lot of these governments and politicians, I believe, is that they don't understand that. They think, we have to limit the movement and liquidity of money, but that's actually counter to getting more prosperity.
Mm-hmm.
So if you look at a country as being a hotel, what makes a good hotel? You should treat any country as if it were a hotel. You want people to come and stay there. You want those nice amenities. You want the good restaurants. You want the scenery. You want the safety. But if you look at what's happening in the world today, that's not what's happening for a lot of countries. They're not focused on those things. They're focused on trying to protect what they have by enforcing more controls and more rules and more restrictions on money inflow. And that's not going to work, just like it wouldn't work with a hotel. And I think there are wide-reaching implications when you start to go down this theory, because would you want to stay at a hotel where you have to pay half of your earnings to the hotel while you're staying there, in addition to the fees for staying at the hotel? Probably not, right?
Definitely not. Doesn't make any sense at all.
Yeah. So El Salvador is a really nice example. I think President Bukele understands all of this stuff. He used to run a nightclub back in the day. So he understands the service industry and how to attract people to go to a place. And I think that's lost on a lot of people that analyze the situation there. But he knows that you need the venue. You need the country to be safe, first of all, to be beautiful. And you need to let people spend their money there. And ideally, you can treat them better than another place. So that's why they're looking at creating Bitcoin City, the special economic zone, where there's very low taxes when you domicile your business there, or if you choose to live there. But you can see this is likely going to be an accelerating trend in the global south because they want capital, they want money to come in. So you have to create the perfect conditions for that. And history is a really good teacher for what happens when you don't do that. So in the 80s and 90s, you had the four Asian tigers, right? You had Hong Kong, Singapore, South Korea, Taiwan, which developed very, very rapidly. Now, why were they developing very rapidly? It was because you could move money there very quickly. So they were treating money as money, not as a tool for control or surveillance. And that's why they could grow. You have a massive influx of capital, building buildings, building the venue to attract more capital. But if you look at, I guess Hong Kong is a good example. They've changed a lot. It's difficult to move money to Hong Kong now. It's difficult to do business in Hong Kong, to get a bank account even. And South Korea has capital controls now. So it's always coming back to the same point, which is central planning and the corruption of money, or the understanding of money, that leads to less prosperity.